to something breaking in this economy. Now, of course, it has to break. This is a phony economy. This was a bubble that the Fed inflated. And now that it's letting the air out of that bubble, this is inevitable. But the Fed is still oblivious to the damage that it created. It still thinks that it can fight inflation.
Today, we will be rolling a clip from the Peter Schiff podcast. Peter Schiff is an American businessman, broker, and author. His educated view on the economy will help shed some light on how this inflation problem will unfold. Like that short clip from the intro says, we are close to something breaking in this economy. Stick around to the end of this video for some advice on how best to protect your money against inflation. If you've enjoyed our videos, leave a like and subscribe to the channel so we can keep producing more. Let's take a step back and examine the unique situation that our monetary system is in. Due to the shutdown of the economy during the COVID-19 pandemic, both businesses and the general population were struggling to get by. In response to this, the government printed massive amounts of money to bail everyone out. This certainly helped in the short term, but the repercussions soon followed. 80% of all US dollars in existence were printed between January 2020 and October 2021. Naturally, this devalued the currency. Inflation began rearing its head quickly as money was pumped into the market. For many analysts, a market crash seems incredibly likely. The standard Federal Reserve response to inflation would be to raise interest rates. Unfortunately, neither businesses nor the average citizens could afford high enough interest rates to contain this new inflation. This leaves governments between a rock and a hard place. Either way, fixing the economy won't be pretty. As it stands, the Fed is claiming that it can avoid disaster. Many economists are unsure. Peter Schiff lays it all out for us.
To the damage that it created. It still thinks that it can fight inflation. Now, maybe it doesn't think that. Maybe it knows it can't, but it knows it can't admit that, so it continues to pretend that it's vigilant on fighting inflation. But it can only get away with that pretense so long as it can keep pretending that it's fighting inflation without hurting the economy. The minute the economy is obviously in a lot of pain, the minute people are losing their jobs, the minute we're in a recession and it's getting worse, well, then the Fed is going to be singing a completely different tune. And the political pressures coming from the Biden administration are also going to come from a different perspective. Now, an interesting thing did happen, though, in the foreign exchange and precious metals market immediately following those knee-jerk reactions, because the dollar index ended up selling off rather sharply before settling down just slightly on the day. But all of its early morning gains turned into some pretty substantial midday losses before the dollar crawled back, but it finished the day slightly lower. Same thing happened in the gold market. Gold, which was down about $15, ended up rallying to up close to $20 on the high before settling up about $10 at $17.36. Now, is that a sign that we've seen a top in the dollar and a bottom in gold? Probably not. It wasn't significant enough in my mind as a reversal. I think if the markets were really figuring this out, it would have been a much bigger rise in gold. It would have been a much bigger drop in the dollar. So the markets are still operating under the delusion that the Fed is going to win its fight against inflation. They still don't realize that inflation is going to win and that the Fed is going to surrender and instead try to fight to stimulate the economy. But this time it's not going to work. Remember, the only reason that monetary stimulus was able to work in the past is because the Fed was doing it when the official inflation rate was below 2%. And so they could get away with quantitative easing and 0% rates because inflation was still below target. They will not be able to get away with it when inflation is well above target, because the bond market vigilantes will be back. The currency market vigilantes will be back. The gold market vigilantes will be back. The Federal Reserve will not get away with that type of monetary stimulus when we already have high inflation. So that's what nobody seems to understand. that this time it's different because the inflation chickens have finally come home to roost, and nobody has any idea how difficult it's going to be to deal with it. That may be one of the reasons that the stock market basically shrugged off the bad news on inflation. The Dow Jones at its lowest was only down about 450 points, and it pared those losses down about 200 points on the close. Other markets were just marginally lower, and while the bond market initially sold off, it actually rallied back and yields closed slightly lower on the day. Now, as I mentioned earlier, the United States is not the only country that is dealing with an inflation problem, nor is the Federal Reserve the only central bank that's raising interest rates. The Reserve Bank of New Zealand raised rates by 50 basis points last night. That move was expected. They went from 2% to 2.5%. But one central bank that actually gave the markets more than expected was the Bank of Canada. They raised interest rates 100 basis points this morning. The anticipation was for a 75 basis point rate hike, so their interest rates are now at 2.5%. So both the Bank of Canada and the Reserve Bank of New Zealand already ahead of the Federal Reserve. And of course, other central banks have been dragging their feet, but they are going to be forced to raise interest rates as well. In fact, I believe that foreign central banks will still be raising rates once the U.S. has stopped raising rates and when the U.S. begins its next round of lowering interest rates. So that will put even more downward pressure on the U.S. dollar. And in fact, this huge sucker rally in the dollar is simply laying the foundation.
So, as an investor yourself, how should you protect your wealth from inflation as it rises? As Peter mentioned, assets like gold and silver can be valuable during times like these. When inflation is on the rise, so is the value of your gold. If the dollar is on its way to collapsing, gold may be the most valuable store of wealth. That being said, gold is unpredictable, just like any asset or commodity. If you are looking for something a bit more dependable, we encourage you to take a look at Treasury inflation-protected securities, otherwise known as TIPS. The interest rate you earn with these isn't incredible, but the benefit to TIPS is that they're continually adjusted to match inflation so it isn't being devalued. Thanks for tuning in today, guys. We hope you are more prepared than ever for what's coming next. If you want to dive into a little more in-depth on our current inflation situation, we highly recommend our recent video on Ray Dalio and stagflation. He does a great job of explaining things.